All right, good afternoon, everybody. Hope you have a great weekend. And let's jump right on into this for you guys. I got 5 that's on watch here. And the first one's going to be CCL. CCL's got some decent IVR. Been pretty much trending sideways, slightly trend up, but it keeps rejecting that 200-day moving average. So what I'm looking at doing is just submitting a little bit of a strangle here on it. I want to lean it slightly short. And yeah, go from there. So looking at CCL, right? We're still in September. We got 33 days left, so probably 1 week, maybe 2 left in this cycle. But so we're gonna be going to September, and I want to sell the 17.5 puts and those 27.5 calls. That's gonna be about a 13 delta on the call side and a 9 on the put side. Nicely past the expected move. Currently, it's about 45 cents. And I'd want to do about 3 contracts here. That's going to give about 135 bucks in credit and only cost like 680, all while giving over an 80% probability. Okay. The next one that I'm looking at is Caesar, right? CZR. And another strangle here. This one more neutral but slightly short. And again, it's really just kind of hanging out up here near these highs. It had a crazy run up from the low, but really we made these highs and we pulled back down into this range, and we're holding a little bit. So want to take this, like I said, sideways as well, the little bit of short delta. And that's mainly because the market has been a little up and down. So we're going to give ourselves some short deltas to protect ourselves, all while giving enough run room to the upside. So with this one, also September, and I want to sell those 75 puts at the 10 delta and the 110 calls at the 11 delta. Okay, I want to try to get at least $1.35 for this. It's going to only cost about $910 and gives us a really nice 83 probability. Now, would I define this one? Probably not. If you're okay with that low of a credit, then sure, absolutely. Just remember, iron condors are a little hard to defend if things go against you. But that being said, $1.25 for almost a 70 pop. This pop is really good on the iron condor, and it keeps you outside the expected move. So 75, 80, 105, 110 if you had to define that trade. Okay, but again, I would much prefer a 75, 110 strangle. Okay. Next one that I'm looking at is DoorDash, kind of like a post earnings play here. Had really good earnings. Really, it gapped down, but it really just rallied up and went green by over 3% on Friday. So I like it. We're seeing a good squeeze here. We're seeing that momentum shift come in, right? Weekly's looking really nice. All right, and we actually got a squeeze over here in the 130 and actually on the hourly. Like, it's across the board. DoorDash looking good. Now, why a debit spread though? And here we got some room, right? We got room all the way up to 215 and above. But why debit spread? Because the IV crush from earnings, right? You're looking at a negative 11.7%. Okay, so with this one, you're looking at buying the 110 calls in September and selling the 195s right at the money. About $1.60 or $1.60, 260. Okay, it's just over 1-to-1. Ideally you want 250, but 260 is okay. Going to give you that 50% chance, but as long as it stays above 195 in 30 days here, you're gonna get 100%. And I shoot for about 25 to 30% on debit spreads. Okay. Next one here is going to be MGM. Right now, MGM, much like Caesars, kind of made its run up to those highs, and really has just been consolidating here all the way back since February. Been in this range. So I'm going to cover the all-time high, but I'm also going to cover down past the 200-day moving average, and just kind of keep it in here. Okay, so with this one, September, right, low IVR, but it's not too bad, and we're going to be looking at selling the 35 put at the 13 delta and the 48 call at the 9 delta. Now this one leans it long, unlike Caesars, by about 7 deltas, right? Try to get like 55 cents with 2 contracts. That would put you about $1.10, $800, and give you an over an 80 pop. And this one I like long because it is above the 200-day moving average and has a light squeeze, so we could see a little bit of a run up towards 42 and 43. Okay. And then now lastly here is gonna be WYNN, WYNN. And that one I want to lean also neutral to slightly long. I wanted to lean it more neutral, but the way the strikes lined up, I couldn't quite get that. So this one, as you can see, WYNN really was consolidating, died off a little bit, and finally, it looks like we slowed down here. So we got yellow on the early entry bars, kind of consolidation range. So I'm looking at being right at that 200 day for resistance, and then a lot of run room to the downside, which is actually gap fill way down here to the downside. Okay, so with that, we're looking September again, selling the 80 puts and selling the 115 calls. Okay, try to get at least $120 here. Gonna cost 950 bucks, and again, give you over 80 pop. Now, would I define this one? I don't know, because the credit, you know, you go from a 14 to a 24 delta, makes it a little hard. You know, I would definitely, oh, I did that backwards, didn't I? There we go. $1 in credit, it's a little low. 65 pop is okay, and again, your outside expected move. So if you're okay with this dollar, there you go. I wouldn't go any closer than that. Again, it's really hard to define and manage when you have an iron condor. So that's it, you guys. Quick and easy, couple strangles, vertical spread, and you know, good to go. So you guys have a great rest of your weekend, and hopefully one day I see you in chat. Take care, everybody.